Hi, Dan Hopper, RE/MAX Alliance in Westminster, here with the Stop Foreclosure Institute of Westminster. I want to take a moment and kind of talk a little bit about this week's blogs, and I've got them listed here on the board, and we'll kind of go over them a little bit, and I just want to give you a little bit more insight, elaborate on each one of them a little bit more, and just talk about the short sale process through these blogs. Again, these were this week's blog postings, and we just want to kind of elaborate on it and kind of share some of my thoughts and what I've experienced being a short sale broker for the last 11 years. Waiting to place a home on the market during the short sale process. What happens is we're waiting too long. Very often, a person has been trying to work a loan modification, and because of that, working that loan mod, you've wasted 2, 3, 4 months while missing payments. And then what happens? The foreclosure notice is provided. And in Colorado, we have an accelerated foreclosure process, which means once that notice is recorded at the county where this property resides with the public trustee, you have 110 to 120 days when that foreclosure sell date will take place. Roughly 4 months to try to sell the property. So we try to encourage people that even if you've missed 2 or 3 or 4 months and you know you're going to continue missing the next 3, 4, 5 months, by the time you do FHA, 6 months, they start the foreclosure, conventional loans, 4 months, and that's if the bank has their act together, but the banks are doing a better job of having their act together. So again, don't wait too long to place a home on the market, because we have to get it on the market, we have to get a buyer with a legitimate offer, get that into the loss mitigation department at that lender, and then we might be able to postpone the sell dates 30 days at a time. Next thing, broker with no or less short sale experience. You know, we all had to start somewhere. I started, like I said, about 11 years ago, dealing with a couple clients that had to face job losses, job transfers, and things like that, and just loss of income. And so we started the process working with them, and like I said, back then we didn't call them short sales. We just said it was a short payoff, which in reality it is. But you want somebody who has the experience, who has a team. We have a third-party processing team that helps interface with the lender. They collect all the documentation. They make sure all the docs are in together. And again, that comes with our third thing, the improper and incomplete documents. This can delay the process. We do not want to give banks an excuse to delay that process. So that's why it's important to have an experienced short sale broker. It's nice to have a third-party processor to work them, because it leaves me to do what I do, and that's market property. I'm a marketing specialist, so it allows me to do that work, and the third-party processor can help with processing the short sale and assist us in the negotiating aspect between us and the lender. The improper and incomplete document, you know what happens is people try to start pushing things to the lender so quickly that it just confuses the process. Understand the banks. They've hired these negotiators, and they're technically sales clerk, or they're clerks, customer service reps. They're not your true negotiators like somebody, you know, who's gone through 3 or 4 years of negotiating and so forth. There is a great turnover with these lenders. A lot of these guys have their script, and if they have to deviate from it, they just don't know how to do it. So they're a little bit inexperienced in the process. And the reason that there's a little bit of a delay, you know, as we go down to the fourth thing here, adversarial lenders. Well, they're not really adversarial. They really do want to work with us to get the short sales out of the way, because they understand that if they take it as a bank owned through a foreclosure sale, they will probably end up losing 10 to 18%, and we've got facts to support that, and sometimes even more, 20, 22%. But on the average, we're seeing it 10, 12 to 18%. They'd rather work the short sale, I guarantee you. So their problem is they're overwhelmed. These negotiators that the banks have, they probably have anywhere from 200 to 300 files on their desk that they got to get off. And this is why it's important, very important, that when we submit our short sale package with an offer, we want that package to be very complete. We want it detailed with a nice cover letter that basically defines what the offer is, what the bank is going to net, who the buyer is, and all those things, so that they can make an intelligent decision. And they may have to go to an investor who actually owns that note, that mortgage, and kind of present that to them. And if we've got it all laid out for them, we make that short sale negotiator at the bank's job so much easier. And that's our job, so that we don't have this impression, adversarial lenders. We don't want that. Last blog that was posted, short sale is an embarrassment. Yes, life happens, folks. But again, if you're at a short sale stage, there's probably some legitimate hardships. A job transfer, loss of a job, loss of income, a divorce, a death in the family. Just other life-changing events have happened. And so there's nothing to be embarrassed about. What can be an embarrassment, in all honesty, is there is a great number of people that are walking away after they've been down 2, 3, 4, 5 months payments. They get a foreclosure notice, and they just throw their hands up and say, that's it, there's nothing. I just want the bank to have it. Listen, that's an embarrassment, because what happens is the bank now becomes the one that's in control. You don't want the bank in control. You want to be able to be the one that says, I want to kind of control my house. I'm still the seller till that foreclosure date. And if I can get a buyer in there, we can negotiate a short payoff, I'm happier, because number one, I don't have foreclosure on my credit. You know, and it stays there 7, 10 years. Foreclosure on the credit. Let's minimize that. So a short sale is not embarrassing. A foreclosure can be down the road. With the short sale, we can eliminate the bad debt. We can eliminate the tax liability today with House Bill 3648. So we can negotiate no recourse. Because why this is important in Colorado is one of those states that allows recourse for the banks on bad debts like this. So if you go through a foreclosure, you have to understand, all bets are off. The bank can and will come after you. They could actually sue you here in the state of Colorado. Some other states it's not that same way, but here in Colorado it's a different story. So with a short sale, we can note that sometimes we're pretty successful at getting the banks to agree to a short sale approval, and in that short sale approval, it will state no recourse on debt, no recourse on short sale. Let me tell you, I've had clients from anywhere from $35,000 up to $180,000 eliminate debt. And you know what? That's nice that it's not hanging over their heads. Anyway, please visit my site, DenverStopForeclosureBlog.com. Review the blog, and please make some comments on it. Ask some questions. And, you know, we would just love to hear from you. Anyway, I'll catch you next week. And you have a fantastic week coming up. And got questions? Please contact us. Dan Hopper, Remax Alliance, DenverStopForeclosureBlog.com. Thank you, and have a great day.